On stage we'll now have Per Bengtsson from Nordea, Tony Balabriga from BBVA, Elsa Palanza from Barclays, Cécile Rechatin from Société Générale, and Dimitrios Dimopoulos from Piraeus Bank. And this is supposed to be my microphone, and it works. Yes, very good. So we have a number of handheld microphones. And maybe Dimitrios, yes, we don't need the red chair, yes. Well, this morning we very much talked about the concept of the principles for responsible banking. This session looks to go beyond the concept, but goes to establish what needs to be done inside a banking organization, more from an operational point of view. And with that, I think, Tony, I want to start with you, BBVA. Can you give us very briefly an overview of how you are embracing the principles inside your organization?
Well, thank you, Raymond. Great to be here again with my colleagues. Yes, as I comment this morning, we started the journey to define a clear strategy on long-term targets just 2 years ago, and we announced our strategy on climate change and sustainable development in February last year, so 1 year ago. And well, we think that the principles will require to update and probably to refine some targets and to be more explicitly concrete in certain targets also. But in general, we thought that we anticipate what the principles are requiring now. No? So in our case, we, as I said, we have defined a strategy with specific long-term targets at 2025. And we have 3 pillars. The first one is to finance, the second one is to manage, and the third one is to engage. So, and I think the 3 pillars covered in a certain way what is being required mainly by the principles. So on the first one, the finance, our target is to mobilize 100 billion euros on sustainable finance, not only in green, but also in sustainable infrastructure, microfinance, financial inclusion, different areas that we think that are relevant. On the second pillar, we have also clear targets in terms of renewable energy. We have set the target of 70% of renewable energy in 2025 and 100% on 2030. But also we have a more qualitative target, which is this idea of to progressively align our lending portfolios in the more sensitive sectors to the Paris Agreement, and using, in this case, the methodology that we are piloting with to the investing initiative. And then also we have the third pillar, which is engagement with all our stakeholders, but mainly, obviously, with our clients, to see how we can help them also to make this transition. So now, after 1 year time, we are quite happy in terms of what we are implementing. So at the end, we need to have facts and outcomes. So in terms of capital mobilization, we are on track to mobilize those 100 billion. We are very active on lending, promoting new development, the new solutions on lending, which are quite innovative, and also on green bonds as well. And also on the management, on the risk, on the second pillar, we are piloting this exercise with 2DII. So this is where we are now. So I think that, well, later we come to the tips and what we thought that we were the key success factors to have this in place, and which are the difficulties. So the how we have arrived to this, I think, will be more powerful and more useful for everyone.
So Cécile, Société Générale, may I jump to you? Your organization, just like all the others here on stage, have been quite active in the space of sustainable finance for some time. What's new with the principles? Is this another block that you need to fill in, or does it have a different function?
My answer will be quite similar to what Tony has just said, actually, because when we heard about the banking principles, we thought that it was really consistent with what we've been doing so far, but it was kind of overarching structure, and everything that we were doing was fitting well within this structure. But it helped give this consistency, and also sometimes internally it can be useful to have the people make sure that what we are doing is also what the other banks are doing, and I think that this convincing of the client relationship managers, of the front officers, sometimes, well, they think, well, do we really need to do this? when you are able to show them that yes, because the other banks, the leaders in sustainability are doing this, it helps, and it helps accelerate, it helps going quicker to this objective.
Do you have to make it clear to those people at the front desk interacting with clients that this is much more than marketing?
Yes, clearly. I think we need to be honest about this. Culture is key. It's something that we've been working on for many years. We see something changing lately because I think it's been said before, but the new generation finding sense in what they are doing and their day-to-day business job is very important to them. And even for older generations, I think that everybody thinks that there's something happening around climate, biodiversity. We hear a lot of it at the television, and then people realize that what they do in the bank, whatever their job is really meaningful and important and can make the difference. So that's this that we want to see in the banking principles also.
Per at Nordea, we talked last week, and you explained to me that you need internal selling of this idea, of this whole concept. One of your colleagues travels around the world and he makes videos, Sasha Beslik, and he stands actually on the Greenland ice shelves and explains why this is important, that from a bank perspective this is addressed. Is that also part of the internal campaign that you have in Nordea to make sure that you embed sustainable finance into your culture?
Well, he's the salesman traveling the world, and I sit in the office and work on these issues. Just to add maybe a little texture to what you were saying about setting targets and about discussing with the front office. We also have a substantial amount of work to do with the mid office and the back office. We have started several working groups or work streams within the bank to start implementing these principles in various ways. We have the risk department to integrate ESG risks in our risk framework. It's something that we're working with, and I've just found on our board level we have 17 different risk documents. I think there are some 1,000 pages together that all identify the traditional financial, operational, reputational risks, etc. And now we're trying to integrate ESG risks as well. So that's a massive work, and that's also work that involves the supervisors because they have to approve all our processes, etc. We need to involve the IT department because we started to try to tag our green loans and try the exposure to various sector, be it carbon intensity or etc. etc. Then you run into issues about IT budgets and mundane things like that. But there are a lot of practical things. You involve the legal department. What can we report on? Negative impact. Is that something? How do you put that to the market with our with our agreements with the stock exchange, etc. That type of reporting. What do you do with your loan agreements? Do you incorporate the principles? Should they be representations and warranties? Should it be event of default? You have quite a bit of that type of not so flashy sort of marketing sales work as well to do.
So very much a journey for the entire organization from top to the very bottom, and not just for a CSR or sustainability department. Elsa, is that the case also at Barclays?
Absolutely, I would agree wholeheartedly. I think so. I'm quite new to Barclays actually, and I would say that coming in anew, it's been a really interesting process to sort of scour the bank and find these pockets of activity that are all quite exciting. Honestly, there's a lot of good work being done, but I'd say that actually one of the great benefits of the principles is providing a cohesive umbrella or cohesive strategy for us to all align ourselves with, to bring these disparate pieces together and begin to build that. I think there's no doubt that this has to be attacked from multiple different places. We've found our risk team similarly to be a great place to start, most notably because certainly in the UK we find that the regulators are suddenly providing some amazing wind at our backs in terms of starting to ask really probing questions about what we're doing, investigating our own exposure to climate-related risk. And so that's a huge opportunity for us to build upon in terms of then advancing some of our other sustainability agenda. So I would agree.
I'm really proud here on stage to have an accurate reflection of north and south and east of west of Europe. Dimitrios, Piraeus Bank, the biggest bank in Greece. How have you embedded sustainability into your organization?
Well, thank you for the question, and thank you for inviting us. Well, the principles come at a very interesting moment in Greece. We're trying to struggle to come out of a 10-year economic crisis. The banks have been basically restructured in many ways. They have new boards of directors and new CEOs and all the rest. So it is a very interesting and a very exciting moment. So what are we doing now? How are we trying to incorporate the principles internally? Because that's where we put a lot of emphasis now. And one of the first things that we do, well, first of all, our CEO was in Paris, and he presented the principles at the launch of the event in Paris. And secondly, one of the next thing we did is to establish a committee. Well, we had one, but we re-established it on corporate responsibility, with the main mandate to coordinate within the whole of the bank and the whole of the group, Piraeus Bank Group, what we are doing to implement the principles. Now, this committee is chaired by the CEO himself. The first meeting will be held in a couple of weeks. That's in February, and one of the first things we want to do is to approve an action plan. We have a draft action plan of exactly what we'll be doing on 3 levels: internally, nationally, and internationally. And one of the internal issues that we'll address is to set up a steering committee to bring together those silos in the bank. All those different departments that don't talk to each other, don't even know each other, but they're all doing bits and pieces that contribute to sustainability. So we're going to bring that together. That is very, very important, because we want to make sure that these principles is not just an issue of the sustainability unit, it's an issue of the whole of the bank. So those are the first steps that we were trying to do internally. Of course, we want to get the board of directors on board, and this is very, very important. So we arranged a meeting. Now I sort of go into what we do nationally. This was a press conference, a very big event in Athens, where we had the chairman of the board, we had the CEO, and we also had the governor of the Bank of Greece. And we presented the principles to other banks and to other stakeholders, because we realized that if we're going to go ahead, at least in Greece and in the rest of the world, I understand, we need to work together. We need to bring the various stakeholders together. So that was very, very important. We're working very closely with the Hellenic Bank Association, because we're trying to get all the other banks, there's not that many in Greece, about 4 or 5 basically, to get them on board. And which also at an international level, we try to work closely with UNEP to spread the message as much as we can, hence our presence here today.
So it's great to see everybody's working on step 1, embedding it into your culture, embedding sustainable finance into your culture, embedding this responsible banking principles. The principles are going to evolve a little bit before they are finalized in September and signed in New York at the United Nations. But then from there onwards, let's talk about the next steps. How do you operationalize that, and how do you actually ensure that that operation is efficient and effective? Elsa.
I have the mic in my hand, so I have to go first. Well, I think, so I'd say first and foremost, it is really important. It was very helpful for us. I'll be quite candid. I think just to have our CEO be the one to sign his name up to the principles is actually in and of itself critical for us to ensure that, as many have talked about already today, that there is leadership from the very top. And there are some exciting developments internally. Unfortunately, our ESG report comes out at the same time as our financial reporting in just a couple of weeks' time. So there's some things that I desperately wish I could share with you right now that unfortunately we'll have to just wait, and I encourage all of you to take a look at it later.
Just one thing.
I can't give you the inside scoop. But I will say that I think certainly we're changing some of our governance structures to think about ensuring that it is both true internally and also visible and obvious to those externally that both our board and our executive leadership are deeply invested in this. in terms of next steps, it gets down into the nitty-gritty of how we start applying these principles across every operation within the bank. We've certainly taken a keen look at our lending practice first and foremost because it's a huge portfolio and it's sort of a first go, but there's a lot more exposure to take on. And we're not shying away from that. It's just a matter of phasing it out in a way that is doable, quite frankly, and is going to take some time. And that's where I think, again, there's such a benefit to being part of a coalition.
You're talking about exposure to coal.
Not just coal. I mean, certainly sensitive energy sectors, absolutely. But then we start pulling back the layers and we think, what do we do about our agriculture activities? There's such opportunity there, or transportation, or I think everyone in this room can think about 50 different sectors where we could start applying both for climate purposes and also for social ones. This has been brought up already today too, but there's no doubt those issues are completely intrinsically linked, and you can't think about one without thinking about the other. So it's a matter of sort of taking off bite-sized pieces, but to the extent that we are a coalition of banks and can share where things are working in one area and where they might not be in another, then we can learn from one another, and that's one of the best parts about this.
Cecile, Société Générale, is that a similar approach that you have at the Barclays, or is it different?
Yeah, well, I think it's similar on many axes, but we will also make a strong push in integration in the coming months, because that's really where we want to see a difference, in making sure that all the departments of the bank are really involved in this, not only on the capacity to perform the environmental and social or ESG checks that needs to be done, but also controlling them for the risk department or compliance department, and even for the audit departments, making sure that they have this in mind when they are conducting audits, and that everybody knows that what they have to do, and all the lines of defense, the lines of control are there to be done. A great benefit we see also in the principles is that as they can be adapted to the different institutions, different levels, and that they are true for the group, but also for the subsidiaries. And it's a great way to empower the subsidiaries. Sometimes they feel that the objectives we have at group level are not really relevant for them. There we give them a way to say, well, what's your objective? It needs to be consistent with the group, but at the same time it makes it easier for them to see where they want, depending on the business environment, the type of products that they deliver, and so on.
When you look in the future on the implementation, you see a huge need for proper data collection, to be transparent about that. The methods need to be decided, methodology needs to be addressed. But Per, at Nordea, when it comes to data collection, and not necessarily at your bank, but in general, do we have the systems in place to collect the data that we need to accurately measure the impact of what we do? Or do we just need to adjust and fine-tune the systems that we have to get those accurate reporting, or do we need something completely new?
Well, I can say no for your first part of the question. We don't have I don't think we have the systems in I mean, certainly we don't have the system. And I think that's maybe one of the biggest challenges with the principles, as measuring impact and how we do that. And I think it's very important that there will develop an industry standard, so we do it in the same way, because we share some of the clients. We are active in the same industries, many of us, and if we have one completely different view of one industry and another bank has a 180-degree view of that industry or that client, that's not going to work, and maybe this will also become clearer. We heard the EBA today are having a mandate now to investigate these things about green supporting factor, brown penalizing factor. Maybe that will, if they come to a conclusion, that probably will, for European banks, then be the defining method. But I think many are kind of struggling in this space, but it's moving ahead. But I think it's important that we somewhere down the line use the same methodology.
We have an advanced discussion in Brussels at the Sustainable finance action plan, also on taxonomy, an important factor of that. Tony, do you think that that is a prelude to what's to come, or can that European taxonomy be applied on a global scale as well, maybe?
Well, you never know, but the work that's being done is impressive. Obviously, it will take some time. In June, it seems to be we will have the first package of the taxonomy, focus on green activities. So that's great. No, I want to come back also to the point that and the point you said about the data, no? The data and the challenge. That means that to set long-term targets with no data. No? That's my colleague from Federico say, well, this is the challenge, no? And well, the experience that we had is that we had to make some assumptions. We didn't want to have the perfect story to tell, but at least the big picture there. No, I try to find a first minimum viable product, and then after iteration and iteration, after 1 year you will have more granular information and you will improve what you have. No, and that was the challenge when we said, well, we want to mobilize, I don't know how many billions. Well, we start to measure a little bit, but what we consider green and not sustainable. So, there is no taxonomy. So, where do we start? So, well, we try to say, well, there is some standards, the green bond standards, social bond standards. Well, maybe we are going to get the right picture 98% or 95%, not 100%, but it was quite reasonable to do that.
Could this be a risk factor for the ultimate success of the principles?
Pardon?
Could this be a risk for the principles and the ultimate implementation?
What do you mean?
The absence of a proper taxonomy.
Yeah, well, I think that taxonomy will be there, and the banks, the European banks that are already promoting sustainable finance, we are going to use the taxonomy to show better our commitment on green finance and sustainable finance in general. I think it's a good initiative on the EBF to develop a certain kind of guidelines, to have a common language among different banks, to see how we can apply the taxonomy defined by activity to a specific lending portfolio. So it's important, I think, to have certain common criteria to say how to apply for corporate lending purposes or whatever. And I think that will be very helpful for the banks that are, so taxonomy will be critical, absolutely. So in any case, I think that in this journey of setting targets, a lot of banks have defined long-term targets last years without the existence of a formal taxonomy. No. Now we are going to adapt these targets to the taxonomy. But in any case, I think that's the journey, how we have to see. So don't see the principles as okay, in 1 year time after signing the principles, we have to set targets, and these will be the targets for next 5 years or 10 years. No, we have to iterate. No, in our case now we are in conditions to divide those 100 billion in specific targets for certain markets, for certain products now, 1 year after. But it's better to start moving as soon as possible and not to wait to have the perfect movie to get moving. No?
Dimitris, you've clearly started also on your journey into sustainability. Methods and measurement, is that on your radar screen already?
Before I answer that question, I would like to stress something. I think that, and this is what we're doing in the bank, I think that it's very important, before we get into data collection and data scarcity or targeting and all that, is to create a shared vision. That's number one. If we don't get that, I think we'll just be doing what we were doing in the past. Number two is to get the employees, everyone, top management to the frontliner, on board, engaged. These are the people that are going to communicate with our clients, with our stakeholders. These are the people that are going to be doing the business. These are the people that are going to be, making the targets and all that. When it comes to the targets, I am a precautionary principle fan, which means I don't believe that we have to wait until we have all the data, because we never will, to decide and make the best decision, because we never make the best decision. Decisions are the decisions we just make at that time, and that's it, full stop. So we just have to, and this is my personal belief, that it's very, very important to work with what we have in terms of data, our sense of our common sense, which is very, very important, and our gut feeling, which also helps in many ways, to understand risks and all the rest. So it's very, very important that these prerequisites are there. And then we can start talking about targets. I believe that we should have an adaptive approach to targets. Just like Tony said, you can't set your targets tomorrow or in September when we will be signing off the principles and set targets in stone and that's it. No, you have to be adaptive because the world changes and we have to change along. And this is what I like about these principles because they have that feeling of adaptiveness, of being able to adapt to reality.
Very interesting. Let's shift the discussion to clients and the client perspective. Clients, and we heard the World Wildlife Fund this morning on the panel talk about clients becoming ever more demanding. The future generation is going to be even more demanding on banks in terms of the products. So banks should anticipate that and try to be ahead of the pack. Now, we all support that. We all want to do that. We all want to take our organization over there. But how do we explain to clients that this is happening? And we have a lot of clients nowadays also who might be interested in this. Are clients really waiting for a bank that is embracing the principles? Dimitrios. Is that the case in Greece?
I guess it's the case everywhere. Well, at the moment, customers in Greece and clients in Greece are struggling to survive, okay? So that's one thing. So when you're thinking of surviving, you don't really think of, like what's going to happen in terms of principles and all the rest. But
so it's all nice and well to do the principles, but what is the difference for the clients?
I also feel that because we are coming out of this economic crisis, because we are receiving what is happening in the rest of the world, that there is a concern there. And we always like to see, what's the next day? Because eventually we're going to get out of the crisis. So we are, and that's what we do in the bank. That's what we saw with the principles as an opportunity to get our act together. It's an opportunity to realize what we've done in the past and what we should not do in the future. And that will give us a competitive advantage. And we want to share this with our customers. So what we can do, we haven't started doing it yet, but we have all these channels of communicating with customers. All these, I've written it down because it's a real nice customer value management systems. Great, nice systems. I don't know exactly what they are, but I do understand what they do. And we're going to be working closely with that. We have, we have in various branches, we have what we call the green advisors. All these people will have to be, they have to come on board and they have to go out there and talk to the customer. I don't think that the customers are waiting for us or the clients. I think we will have to create the need. Just like we've done in the past when we started, because we were the first bank to come out with the first green product, which was, for photovoltaics about 15 years ago. That was something extremely new. There wasn't a market out there, but we sort of created the market. And it's the same thing we're trying to do with biodiversity, because one of the biggest segments we have is the agriculture. Like we have, I don't know, almost 70-80% of the agriculture business in Greece, because we acquired the agriculture bank. And so we're looking at how we can bring in these new ideas like climate change and biodiversity with agriculture and renewable energy and all the rest. And this is an ongoing effort.
Tony, I want to switch to you because financial education is also on your radar screen a little bit. Does a bank need to educate its clients on sustainable finance and the risk principles?
Yes, well, banks should have as a main KPI the financial health of their clients. And we should align our activity to promote the financial health, so helping them to take better financial decisions. And in fact, with financial health, we have already a KPI on our business team that is being considered to become one of the variable KPI for compensation for our development business team. So it's a good example. So I totally agree that we have to, but I will add to the point that Dimitrios shared. No, I think that the market has different segments and the speed are different. And today I would say that on wholesale banking, corporate clients, institutional clients, well, the market is there. So you start to see specific clients that comes to you asking for different type of solutions. And that's great.
Is there a typical kind of client that's
well,
asking
it's starting to happen. I mean, the leading companies in a specific sector, not only in renewable energy, but in general, they are happy to hear different solutions, no? Like a ESG link facility or something like that. So start to see, so the market is there, and I think banks that are first movers are developing more and more solutions. The point also is the retail market, no? Where we still to far of what the scale of change that we need, as Martin Spoch said before, no? And probably technology will help us, no, to mobilize these millennial new generations, no? But on the corporate clients, we see that we engage with them, we create a better customer experience. Sustainability topics helps you to have a dialogue, a deeper conversation about the future of the client. So, and when the future of the client is on the table, in front of you, you don't have the chief financial officer only, you have the CEO also from the corporate client. So you move from a traditional transactional level conversation to a more strategic partnership conversation. So that's what is at the end of the day creates value, no? And we are quite optimistic on this level of clients, no? The challenge is how to mobilize this at a larger scale and how to have the right incentives to make it, no?
So clearly present in corporate clients, but not necessarily widespread in retail clients. If we move to France, Société Générale, Cécile, we have a very critical client base over there, critical of banks, critical of government, critical of everything, basically. Are retail clients that you see, are they asking for sustainable products? Are they asking for a responsible bank?
Some of them are, but I won't say that for the time being. It's we feel this very strong pressure. Actually, I think that on the client side, for the time being, we have mostly focused on our efforts on engaging with the corporate clients. But clearly, we need also to do more about the retail customers. But on corporate clients, it's something that we've done for many years now, and we see that with the big companies, international companies, they have a very structured information about CSR, so that they are very happy to discuss the subject, even when they have controversies and so on. The very small companies, generally, they are quite happy also to discuss about this, because as has been said, it's about their future and the ways they see their business developing. The issue we have is with the middle range of companies, because they very often they struggle to devote enough resources to these aspects, and also it clearly depends on the geographies. Where the subject of CSR and sustainability is not so well developed, sometimes it can be extremely difficult for the client relationship manager to start this conversation. And they really need training, and they need information to help them start the discussion and get the client to give information. And even with that, in the end, very often, we only get partial information, and that's where it's difficult to make an informed decision.
When you look at that difficulty that you face as bank, could the principals play a role to better come to grip, to basically give your organization a guide to help coach these people that are directly facing clients?
Yeah, sure. We already do that, but certainly it can help. It will also help to know that the other banks of the banking pool are asking similar questions, because very often they come back to us saying, we're the only one to ask these questions. And we know that's not true, but when it will become standard practice, it will be much easier to say, well, everybody is asking you why you had this accident in this operation of yours, why you have controversies in this, and it will be much easier to start this conversation. But also, I don't want it to sound too negative, because very often linking it with the positive side, for instance, what we see also is that clients now come to us saying, well, a green bond would be something very interesting. What do I have to do to issue a green bond? So we see that linking the positive and the negative can help this conversation also.
That's interesting, and I'm very aware that we are digressing more into sustainable finance away from the principles, so I'd like to take it back very much. But I sense, and disagree with me if you disagree, I sense we have a difficulty when we have great enthusiasm here on the start. Everybody is embracing it, everybody is signing up. Simone was saying they expect 100 banks to be signing in the final principles in September. But I'm not clear yet on the next steps. We seem to be lacking methodology. The taxonomy is incomplete. the ways to measure impact when you go look at the 6 points that are part of the principles. And also, I'm looking at you. You have a lot of experience also in the Clinton Global Initiative. Are we ready to make this next leap into the responsible banking principles one after we've signed?
I think we have to be ready. Fundamentally, we were signing up to this. It's a framework that has been needed, and the world is moving on, and either we're going to be prepared to meet the challenges that come, or we're not. And so fundamentally, again, I'd sort of reiterate what I've said before and what others have said about the benefit to this being a coalition of partners, ultimately, who can help one another, both in terms of our intelligence and our ability to both adhere to the principles, but then also move beyond. To your point about next steps, I think this is the concept of iteration is one that is really important, because it's not just about sort of taking where we are as at a baseline, but actually being imaginative and creative about how we imagine another paradigm for ourselves. So I do think that you mentioned my previous experience. I do come from a social impact background, not a banking one, and I think the benefit that brings to me in my new world is the fact that I've seen, based on data, how much it matters if you go along in partnership with others. That indeed, if you actually join with partners to achieve something, you have an exponentially higher likelihood of succeeding than if you go it alone. And that doesn't just mean the banks, and not the banks here on this stage or the banks in this room, but it means our civil society partners, it means governments, it means that we have to actually, this is quite literally an ecosystem that we have to work together to achieve. And that ultimately, as we iterate and we make mistakes, and those will be made too, and I think it's important that we're honest about that fundamentally there are things you try out that either don't work as well as you had hoped, or maybe just aren't quite as impactful as you had hoped, that there's space and room to grow from there. One of the biggest challenges I think that probably we all face is that you are to a certain extent comparing apples to oranges when you're looking at financial institutions, because we have certain elements that are very much the same, that we can compare one to the other, but then it also means that Barclays is very idiosyncratic. We have a 328-year-old retail bank. Every third person in the UK has a Barclays product of some kind or another. But the vast majority of our investment practice is in the US. And so those are really different cultural paradigms that you have to blend together, that I have to spend my time thinking about how to bridge that gap. And some of my colleagues have similar paradigms, but not exactly the same. So it's a little bit of a mixing of learning that we have to do.
One of the things when I joined the European Banking Federation 5 years ago was to discover along the way that the European banking sector is massively fragmented. Large bank, big bank, 6,500 banks. If you take 100 directly supervised banks by the ECB, you have 80% of all bank capital in Europe. You have savings banks, cooperative banks, public banks. So much diversity in the banking landscape. Per, looking at you, I mean, you're the big bank in Scandinavia, Nordea. Do you think we are able to collaborate and to work together in the banking sector? To make sure that we develop the right framework to be successful in delivering on the principles.
Yes. It's a Scandinavian answer. No, but
very clear and optimistic.
I think there are all over the world now. The banking industry have trust issues. Some deserve it more than others, and some less so. But I think it's become very apparent when I've been working with these principles now with 28 banks from all over the world, and everybody seemed to experience the same thing. The purpose in society. There have been scandals. Morale among staff becomes very low when you see your employer in the paper every other day being involved in some scandal, being mis-selling of products or involved in money laundering or whatever it may be. So I think we very much have to engage, and I think the principles is a very excellent tool to get a global alliance going, because banking is essential. We have heard now from the EU here in Europe, some 180 billion needs to be mobilized annually for the next 11 years or what it was, and then the banking industry needs to be on board for that. And I think for us to be effective in working with that change, we need to have trust and be seen as a fair player that have a good purpose in society.
So what else needs to be done at the UNEP Finance Initiative to make sure that the banking sector continues to collaborate after September, Tony?
Yes. No, we need to work a lot before September, internally, and well, let's ask which banks or representatives from banks here that are not endorsing yet the principles here are considering to endorse the principles. Could you hands up? 1, 2, 3, 4, 5, 6. We have 6 banks more. No, true. I mean, we need to share the journey that we are having and the experience, and try to mobilize more banks, not only in Europe but also everywhere in the world. Emerging countries are also very relevant. The principles can contribute a lot in Europe, but can be absolutely critical for certain emerging markets to high the bar and the standards of the banking in those countries, and create a huge impact in people's lives. So I would say that we need to be a real coalition. We are not competing on this. The planet we have, the human being is something that we are going to have there for everyone. So we need to work all together on this. We have to scale up our ambition and to become more banks in order to say, well, if you are not there, as Martin said, you are going to lose your business. I mean, we think it's a long journey. The flexibility of the principles are quite, let's say, quite significant in terms of, well, if you are advanced bank, you can set targets sooner, and but if you are just starting the journey of sustainability, consider the principles as the right approach to create that sense of urgency that we need to create within our banks. No, when Dimitrios said before about, well, before targets, we have to first see cultural issues, governance, and say, totally agree. I think it has been very useful to use all what is happening outside around pressure from regulators, pressure from investors, pressure from clients, and see how we can use all this energy to create this sense of urgency, to mobilize change, and to say, well, why not? Let's sign the principles. So I think that's the moment where we are. That after September, we are going to be 100, we are going to be more, and I'm sure that after 1 year, we are going to see 30, 40 banks of these 100 banks setting specific long-term targets. Even maybe we can have a collective target. So that would be ideal, no? And altogether, we are going to learn better how to analyze this new reality, no? Climate risk, climate opportunities, inequality as a risk, how we can manage better. So I think we are going to learn a lot on this, but I think that's it's a huge moment. So I would say those banks that here are interested in knowing more about the principles, I think that we have to be there.
Cécile, Société Générale, are the banking principles the opportunity for the banking sector to re-establish their license to operate?
Yes. Well, certainly it will help recreate some trust. We can see, because we have started discussing them with some of the stakeholders, civil society, for instance. They've been very interested. We heard Sébastien Godinot this morning. I think that NGOs are interested by this. As he said, he wants to see the implementation. I think that all the people will be looking at us saying, so what are you exactly doing through these principles? We need to deliver. As has been said, the pressure is good, but we need also to to do things step by step, set us the frameworks, make sure that we have common methodologies, and then deliver on these objectives.
Dimitrios, trust, rebuilding trust as the banking sector, are the principles the final opportunity for your organization to rebuild trust? I know it's difficult in Greece, but is that a factor that you consider?
I agree with Cecil. That's a Greek answer. No. Well, trust is the thing that makes banks work. Full stop. And trying to regain the trust that's been lost is one of the major issues that we are facing, not only in Greece, I think globally. But let me say something before that. History has shown that the world changes by small groups. It's small groups that have made all the changes that makes us live here today in the 21st century with all the luxuries that we know and all the technology. So we are a small group now, but I think we're going to become a bigger group later on. And this group will change the way that banks are. That is my vision. And this is the vision I want to share. All the other things, the problem with trust, the problem with data, the problem with like methodology, all those things will come step by step, step by step. This is a long journey. This is not a short-term journey. This is a long-haul flight. It's a journey where there's toll posts, there's a journey where there's potholes, but we know where we're going because there's a lighthouse over there, and that's called the Principles for Responsible Banking. And we've got to make sure that we don't crash into some rocks there. We know what to avoid. We've learned from the past. We've learned from the crisis. Hopefully we've learned from the crisis. Hopefully, because I'm not sure if human beings do learn from their mistakes, I think, unless they make the mistakes themselves. So, yes, I think that, like gaining trust, principles will help us gain the trust. And this is something, that's why we have endorsed it in Greece. And what our CEO said. These principles resonate with the values that we are trying to create now. So that's why I think it's a good time for us in Greece to embrace these principles and make the next step.
Per Nordea, as a Finnish bank, yes, trust, license to operate. Also looking ahead to the coming year or this year in Brussels, the new European Commission coming on after the elections, new priorities being defined for the work of the European Commission. Nordea now being legally or going to be legally a Finnish bank, so you're in the Eurozone. Question to all of you, very briefly, but Per first. What do you think? How can the European Commission help the banking sector embrace these principles and do what needs to be done? Because I see there's still a lot of work to be done, especially on phase 2.
I think the EU action plan on financing sustainable growth is very ambitious and a welcome initiative. And I think this is the first time they involve the financial system in this. They have the targets in the transportation sector and renewable energy, etc. Now they're bringing the financial system into the process for a sort of competitive, sustainable Europe. So I think what they are doing, from my perspective as somebody working in sustainability, is very, very positive. And of course, you have this balance between now principles and regulations and so forth. But I think the first round of regulation will be not so all-encompassing as the principles are at this point. There are 3 legislative proposals now, and they have 10 actions, so more will come. But I think it's a positive for development.
Tony?
Well, I think European Commission can play a key role, not endorsing officially the principles, but showing to that they support the principles and use this framework, this umbrella, as a framework in their speeches, in their position papers, and so I think it's important to this recognition, no? And the recognition of certain banks that are evolving significantly. Having said that, I'm thinking about next 5 years' time. The action plan has been very welcome, and it's clearly a game changer. But we honestly think that we should upfront the challenge of the incentives in in a more holistic way. You know? Till now, everything has been discussed around the famous green factor or brown factor or whatever. And we think that we have to consider not only at the European level, but also at the national level, or even at the local level, at the city level, which kind of incentives we really need to make the change. You know? If we don't create big incentives, we are not going to create big change. And we need big change. So we think that it's not something to be solved today and only with a specific action. It requires a more comprehensive approach from actions that could be taken at the European level, actions at the national level, actions at the local level, city level, and including taxes, including everything. So, but if we want to change how we behave, we need to create incentives that are really material. That's our opinion. No? Otherwise, okay, we are going to do quite well. Maybe even we are going to mobilize that 180 billion we need every year. Maybe, yeah. But if you want to change the behaviors at the consumer base, at the retail base, I think we need greater incentives to do it.
Elsa, what kind of support do you expect from policymakers in the next 5 years?
Well, I think it remains to be seen how much the European Commission will matter for Barclays, given what we're facing at the moment. But I
consciously said policymakers, not European Commission. Yes.
In our case, there's no doubt that, so I mentioned this earlier, but in the UK, the PRA report that a consultation that's been underway has been hugely helpful, and so certainly helpful to us as sustainability professionals inside financial institutions, thinking about how do we sort of incentivize our own teams to understand that this isn't just a nice to do, but indeed it will have regulatory implications. That gets the risk team going, which then in turn sort of helps to feed into the strategy. So these are all these links in a chain that end up helping with the overall picture. But I think there's no doubt that you have to have the push and pull from a policy and regulatory perspective. It helps a whole lot. I think at the same time, we don't want it to just be a mandated approach, to the extent, again, the reason why the principles are great is that as we can form our own coalition and articulate for ourselves, with ourselves, where the opportunities and the drive should come from, then it's self-motivated, which is inevitably more powerful and sustainable than just that being forced upon us. And then, yes, the regulatory part helps, but I think it has to be a push and pull, no doubt. And I would echo what Tony said about the positive side, the opportunity side, that to the extent that we can start capitalizing on where we can double down on the markets that are going to drive positive change and that side of impact rather than just mitigating harm, that will be to everyone's benefit.
The view from Paris, Cecile?
Sorry?
The view from Paris.
Sorry. Well, it's quite the same. I think that for the time being, it's going the right direction. The EU is clearly helping us with the frameworks, with the taxonomy, and also with the action plan. Reporting also is very important. I think that we have just completed our first statement under the extra financial performance directive, which has been transposed in France this year, and it was really helpful to see how it changed the reporting in helping us realize what was really material, important, and putting that in the reporting. So I think that we have all these frameworks that help us, European banks. We need also to make sure that this is something that can be developed elsewhere if they don't have their own frameworks, and that we can disseminate the good practices.
Dimitrios? Europe in the next 5 years, how do they need to help?
Well, I don't believe that we live in a perfect world, and I don't believe that there are perfect people, which means, in a few words, that, I do not expect that, all the banks, all those 6,000 in Europe and I don't know, 25,000 all over the world, will voluntarily join what we're trying to do here. So I understand that the European Union can play a very important role in providing incentives. I agree, absolutely agree on that, providing disincentives as well. Incentives for the banks to give out loans, but incentives for borrowers to go and ask for loans. Okay, you need both. And also, I think that through regulation, which to a degree is necessary. I understand I really believe in push and pull, but maybe there's push might be a little bit more important at the moment, because we have to take into consideration that we don't have all the time, we don't have the leisure of the time to wait and see when everybody, all the banks or all the financial system is going to wake up to its responsibilities. We are in a state where our planet needs urgent action, and it needs it now. So I think that the European Union can play a very important role there and can be a leader globally in promoting these principles.
Now we've got about 10 minutes, and I think we want to move towards a final statement. In the prep call we had, I asked all of you to consider one specific principle that you think holds most potential, or that is most relevant for your organization. We had a big discussion. No, don't do that, because you need to see all of them together. But we're on stage now. We're live. You cannot get out of it. I'd like all of you to do your final statement. But pick one of the principles: alignment, impact, clients, stakeholders, governance, and transparency. Pick one of them and explain how you see that moving forward, and say anything else you want to say, and then we wrap up. And I start with the ladies first. Elsa, Barclays.
Thanks for that. Well, gosh, I don't know that I have a perfect soliloquy to end on here, but I think I do have the benefit of going first, so you all have to pick different ones. I think there's no doubt they work in an ecosystem, and so you really can't disaggregate, but I probably would choose impact just because there's a lot of meaty material you have to dig into there, and it's not just about outputs, and it's really about could we imagine a day where down the road we actually get to the point where it's not just about the maybe products and services and outputs that we're providing or engaging in, but that you're actually able to link real impact both with climate and with social challenges to the actions that we took. And that's really the ultimate ideal there, is to be able to measure that in a meaningful way. And so I think that's probably one of the trickier parts, certainly for my team. But all the more reason to double down on that one. And I think that just linked to that, we haven't talked much about the TCFD in this conversation, but I'd say that another benefit of the principles is just that it wraps up a lot of other engagement that we happen to have, and that I think probably a lot of my peers do as well. Being quite active in the TCFD, being quite active in a lot of other frameworks where we're trying to actually push meaningful action, and to the extent that this can be sort of a uniting factor, that's tremendously helpful. So we're really honored and happy to be part of the original 28, and would encourage all of you to join us. Thank you.
Cecilia, if you want to choose impact, go ahead. I mean, that still says something about the consensus in the panel.
Thank you, but I was considering rather to choose stakeholders, because I think, yeah, I think that eventually it's the stakeholders who will define whether the principles are a success or not. So it's for them that we are doing that to some extent. And I will cheat even a bit more than that, because it wraps up all the other principles. And as they are really asking also generally for transparency, I think by choosing stakeholders, you also have transparency and reporting in it.
I'm going to choose governance. And I'm going to choose governance because we heard in the morning that, before the crisis we had rules, regulations, you name it, and yet we still, face the problems, and we're still facing these kind of problems. Pierre mentioned a few issues that they're facing up in north. I mean, there's a lot of issues like that down in the south, west and east, everywhere. So I think it is very, very important that you have the right governance and that you have ethics and values. This is the only guarantee that we have that what we're discussing here today will be successful. Otherwise, it's going to be another little greenwash, or in worst case, it might even be another, scandal. So governance, ethics, values, very, very important, and that has to do with people, because people practice ethics, people practice values. So educating internally the people within the banks so that we can do the right job.
Per, the view from Stockholm.
Okay, after all the work we put into all these principles, I don't want to abandon anyone. Might be sad. But I would go for alignment. bearing in mind that it's an alignment of the frameworks, both the International Paris Agreement, the UN SDGs, but also the local national frameworks that stem from this. All throughout the Nordic markets, all the national governments have plans and initiatives around the SDGs and the Paris agreements for the national commitments and so forth. And we are engaged with many of our clients in these industry groups. It's transportation, it's construction, it's the forestry industry, steel, and etc. So these are our clients that are also engaging on these issues where we can meet them and cooperate with them. And we also find, coming back to clients as well, that we are really being chased by our clients as well. They want to see a sustainable bank as their financial provider. It becomes more and more frequent now that they ask us during requests for proposals, if there is a bidding for arranging a loan or a cash management service or something, that they want to know about our sustainability policy as a financial a supplier of financial services. So that's why I choose alignment. We need to be aligned with society and our clients.
Tony.
Well, I will, well, difficult, but I will choose the clients. Because at the end of the day, clients is what it gives sense to our activity. The purpose in our case is to bring the edge of opportunity to everyone. So we have to engage with our clients in this journey, help them in their lives, in their projects, and see how we can embed these social and environmental issues on this conversation, on this engagement, and provide them better solutions for their lives and their projects. So I think that's the main target for us. Also, I would like to say two messages. No, I mean, I used to say internally that we are the ones that we are working on sustainability teams or responsible business teams or CSR teams. We are paid to break comfort zones in a certain way. No, so we are there to challenge the big corporations. No, to change from within. No, so I think that's the. So I think the principles are the perfect platform. No, to start this. Difficult conversation, no, to challenge the organization, no, and to be more transcendent, no, to create impact. So I think that we cannot reuse or not use the use of the emotion, no, that we have and the sense of the meaning of what we are doing. So I think it's very important. And then also another recommendation from my point of view is that don't feel the pressure to not have the right answers. We don't have today the answers. We are going to be evaluated by the quality of the questions we put on the table. So now it's time to put the right questions. The answers we are going to discover. So I think it's also critical. I prefer to say to my CEO, I don't know, that to say, well, let's see. No, I don't know. We don't know yet, but we are going to. So the key point is to make the right questions today, and then later will come the right answers. No.
Well, thank you very much. Thank you very much. Let me have a good round of applause for the panelists. I think some very interesting insights.